Australia is in the midst of a housing crisis, and now it could be about to get worse.
Today we're going to be having a tough conversation, and that is hopelessness in Australia's property market. There's a lot of talk about severe competition in the market, that first home buyers aren't going to be able to break into property, and that people are going to be stuck as forever renting in their lives. We need to talk about how you can educate yourself, how you can work to grow your savings and look to break into the market. Some people aren't going to have the help of mum and dad. Some people aren't going to be able to afford $1 million property. But there are ways and steps that you can work towards buying and breaking into Australia's property market. To begin with, we've just been through a turbulent last 4 years. COVID saw a massive change in Australia's property dynamics, with the government significantly reducing interest rates, or I should say the RBA in that case. There was then speculation driven into Australia's property market, and now we've seen skyrocketing property prices, severe competition both from overseas and interstate, and growing numbers of people here in Australia because it's such a great place to live. Now, all of this whirlwind of demand and growing property prices has seen a sense of hopelessness set into people who don't think they can break into the property market. So the first thing you need to look to do is get yourself educated. If you can't see the path to success in this case, which is breaking into the market and buying your first property, if you can't see that path to success, how do you ever think you're going to get there? So what are some of the ways that you can get educated? Of course, the first thing you're going to need is money. You need money to make money, or you need money to be able to buy a property. So let's get educated on budgeting and saving and creating greater disparity between your income and your expenses. With a widening gap of income and expenses, that's going to leave you more savings, which can go towards you building a deposit and breaking into the property market. Secondly, you need to look at the grants and concessions that are available to you as a first home buyer or an investor for that matter. Whatever your next step is, make sure you have all the options available to you. Emily and I used the First Home Super Saver scheme, which allowed us to save about $10,000 to $15,000 extra because it reduced our taxes. Now, we were on incomes of around $50,000 to $60,000 each when we broke into the property market and bought our first home. And for most people these days, they're going to be able to use the First Home Super Saver scheme. They should also be able to look at the First Home grants and concessions. Australian government is offering the 5% grant scheme where you don't have to pay lenders' mortgage insurance. And then the state government in Queensland, for example, gives a stamp duty concession if you buy a property for less than $550,000. But really it's around $500,000 or less because it's a sliding scale from $500,000 to $550,000 for that stamp duty concession. So if you're able to put together the grants and concessions between a First Home Super Saver scheme, the Australian Federal First Home Buyer scheme as well, which allows you to buy with a 5% deposit, and stamp duty concessions in your state, you can maximise your potential of breaking into the property market. Now you've got your savings in place and you know what's available to you to help you boost your way into the market. Of course, there are going to be some people that have their own advantages. If you can get your parents to be guarantor on your loan, or you can get a gift from an uncle or an auntie who is willing to lend you some money for a period of time and you're going to repay that, then those people are absolutely going to have an advantage. And a lot of people at the moment are investing for their kids to have this opportunity in the future. Because property is getting so expensive, people are taking these extra steps to look to help their family or their children break into the market. Now, if you don't have these things afforded to you, you've got to work with what you've got. So look to create the savings and then look to use these grants and concessions. Now it's about buying the right property. So what is the right property? Everyone's going to be different, but the way I like to look at it is your finances and your strategy. So go out and have a chat with a mortgage broker. I use Baxter Hill from Woodrow Finance, but you can use any of the big tier banks. You can have a chat with multiple brokers. Ideally, you're finding someone that's willing to walk with you on the journey, look at your entire position, and maybe look at creative options if you don't have the current lending available to you. That's why mortgage brokers are becoming far more popular. If you have a chat with a mortgage broker, they're going to give you a tier of lenders, maybe 10, 20, even up to 30 lenders that you could look at. And they'll probably pick the 3 best options for you amongst all of those lenders to give you different options. Whereas if you just rock up to one big bank and say, Mr. Bank, can you give me some money? then they might not be the best fit for you. So make sure you have a look at lots of lenders when you're buying your first home or you're looking to buy future investments, because that's going to lay out all of your options. Some banks are going to give you more lending capacity, while other banks might give you a sharper interest rate. So it's about finding the right product for you. Now you've got your finances in place, you also need to look at your strategy. Are you someone who's wanting to build a property portfolio and maybe buy 2, 3, 4, 5 properties over your lifetime? Or are you just looking to break into the market to have a great place to live? Everyone's going to have a different goal and a different strategy for their first property and their future properties. But if you can see your future vision as to what you want to achieve, then making that first property purchase could be critical to your future property purchases. So if you're taking an investment mindset, look for a property with some strong land component. Of course, you're going to be capped by the finances that we spoke about in the last point. So say you do have a hard cap of $500,000, you might have to buy a property 30 to 40 kilometers from Brisbane CBD. But if you can find a property with some good land value, that's in an established suburb, and maybe some future development potential or granny flat potential, then you're going to have options down the track. If you get pushed into buying an off-the-plan apartment where there's 200 properties or 200 apartments in that tower, then you're going to be stuck with less options because that property is unlikely to appreciate in as much value as a house will. Because the house has more land component, which is really the scarce resource at the end of the day, as compared to an apartment, which more supply can be created in a number of years in that same dense area. Now, when it comes to negotiating on your property purchase, first-time buyers tend to make very common mistakes. One of those being putting down the wrong price and terms. That's essentially what buying a property comes down to, is what is your price and what are the terms that you're offering. First-time buyers tend to undervalue where the property market is at by not having enough data or enough touch points as to what's sold in the market very recently. For example, in 2024, the market has grown significantly. If we were looking at property in November, December 2023, property is now up $50,000 to $60,000 in most of the areas across Brisbane from where we were 4 to 5 months ago. And what's happened? What's the difference between Christmas and Easter in 2024? The big difference is the market demand. People are getting their ducks in a row, they're getting confident about interest rates, and they're looking to move into the market to break in based on their current serviceability. What we saw around November, December was a lull in the market because not everyone was ready to buy, not everyone had their finances in place, and Christmas can be a bit of a turbulent time if people want to buy a property and be organized with their solicitors and accountants. So you need to understand the current market dynamics as a first home buyer or as an investor re-entering the market. What this means is be boots on the ground, be attending open homes, chatting with agents and networking. Call those agents weekly, touch base around off-market or pre-market opportunities. Make sure you understand the value of a property by doing comparable market analysis. That's what we call in our business at Purpose Property a CMA report, where you break down those recent sales, you compare that to the current property you're looking at to provide a realistic price guide of where you see value on that property. When you're looking at terms, at a minimum, you want to look at 7 days building and pest, 14 days finance, and 30 days settlement. That's the standard here up in Southeast Queensland. But the more competitive you want to be on that property, the lower you could reduce those terms. If you're fully pre-approved for $1 million of finance, if you're buying a $600,000 house, you probably don't need a finance clause. Of course, chat with your mortgage broker, chat with your buyer's agent if you're looking to do an offer like that. You want to understand the risks involved when you're removing or reducing these types of clauses. But this is why some buyers, especially first-time buyers, struggle to compete against established buyers agents and established investors or homeowners because they're not putting the right price or terms down on their contract offers. Now, you're probably getting a little bit worn down by the property market at this point. Once you've gone through all those steps, you've probably then had to go and see 1, 2, 3, 5, 15, 20, 30 properties before you're even getting your foot in the door and actually being able to secure a property purchase. In our buyer's agency here at Purpose Property in Southeast Queensland, we roughly buy a property every 6 to 8 weeks for a new client. So the average buying time is around that 6 to 8 week mark. Sometimes people buy a property in their first weekend, which is as quick as 48 hours, and on the slow side, around 15, 16 weeks. So if you're looking for 3, 4, 5 months, getting to the 6-month mark, and you're still looking, selling, the market may have moved on you, and your analysis now needs to be up to date again as to where the market is heading, whether that's up, stagnant, or down. So what this means is buyers can get fatigued. So make sure you're being decisive and you're taking action. When you see a deal that ticks all of your boxes, or as many boxes as you can tick as possible, when you see a deal like that, be aggressive with your offer. You'll know when to push for an offer that ticks more of your boxes versus a property that doesn't have everything you want, and you're going to be less aggressive on that type of offer. So it's about understanding when to put the foot down on the gas pedal and go for it, and when to continue looking elsewhere for other opportunities. I want to encourage you wherever you are in your property journey, whether you're saving, looking to buy your first home, or you're an investor trying to build out your property portfolio for more choices. The market is not hopeless. There is opportunity out there if you're willing to save, look at building the right team around you, and also willing to go out there and put in some effort. You do need money to make money. That is a mistake a lot of people make. They think they're going to buy a property and money is going to fall out of the sky and come out of thin air. You do need to look at the market growth and the market potential of an area. You do need to look at manufactured value if you're wanting to fast track your journey. And you do need to educate and understand where the market is at as you go through that buying phase to make sure you have your finger on the pulse so you're making the right property decision for yourself. The market is not hopeless. I really want to encourage you that you can follow all of these steps to break into the market, whether it is your first home or an investment. If you're looking to sit down and have a chat with myself and you're going to be buying a property here in the Greater Brisbane market, roughly a 35-kilometre ring around Brisbane in the next 6 months, then head over to purposeproperty.com.au. You can head over there, use our booking platform to schedule a time with myself. We'll sit down and have a chat, talk about your situation, talk about what we do, and see how we can help you secure your next property purchase here in the Brisbane market. The property market is tough, but with the right skills, strategy, and team in place, you can absolutely go out there and crush your next property purchase. If you want to see a playlist breaking down some addresses with some recent client purchase examples here in the Greater Brisbane market, then click this playlist over here. Thanks for sticking around. I'll see you in the next one. Peace.